Good morning, ladies and gentlemen. This is Sihle from QuickTrade. Welcome to our technical analysis Saturday workshop. I see someone was trying to type a message there. I think it was Andres. Can someone please send me a message to indicate if all of you can hear me well? Okay, thank you so much, Sean. Thank you so much, Sean. Good morning. Yes, Mr. Fari, I can see you there. Thank you. Hi, Ntokozo. Okay, guys, we're about to start now. But before we start, may I please ask you this interesting questions? How many of you have started trading, whether you're trading a demo or a live account? But how many of you have started trading? Have you guys all started? Are you making money? The next question is, are you making money? I don't know what that is, Ntokozo. Is that a question you're asking there? Morning, everyone. Do we have the sound? It seems like most of the guys can hear me well because I mean now they've okay. Let's see. This is going to be very interesting. Okay, let me start from the top. Okay. So Sean has been on a live account for 3 months, and Sean, yes. I don't know. I don't know, Sean. What do you mean? Do you mean what does it mean when you say yes? Is it yes you've lost money or yes you've made money? What is it? Andres started and lost money. Okay, Brian Grant, me not making money, so that means that you are trading and you are not making money. Christelle Lawrence, I started, have lost half of my 5,000 rand already. Eish, yeah, that's bad, Christelle. Sorry about that. Sean, yes, the sound is perfect. Okay. Making and losing. Okay. Gert, making illegal. Okay. Who else? Feng, not started yet. Yeah, Feng, that's not good. I think you should start very soon. I'm not talking about a live account, even if it is just a demo account. But please start making an effort towards reaching your goal. Gert, making a little bit good. That's encouraging. Gert, I like that. Dave, yes, you've started, but are you making money, Dave? That's what I wanted to know. Are you making or losing money? Rhino, live accounts. Sorry, live account. Let me see. Let me see. Let me see. Let me see. Where is that? Live account 2 weeks in profits. That's wonderful. Thank you so much, Rhino. Arun, I lost half of the 5,000. Ah, Arun, I'm disappointed, brother. So you're supposed to be making money. Frank, hi, Frank. Frank, the question was you've started and you lost money. At lost once you get more skilled, you make money. Ah, yeah, that is true. Brian Grant, I use QT, Andrew. So what are we doing wrong? Dave Rue, breaking even. Okay, guys, that's the question. I mean, that's the stuff I would like us to address today. I want us to have a look at the reasons why you are losing money. The way that we is it because of the way that we trade? Is it because of our emotions that get in the way and end up making us lose money? Okay, guys. I want you guys to be interactive. I need you guys to give me the shares or the currencies that you want us to look at. But the main reason why you're looking money, you want to double your accounts in less than a year or in less than 6 months. I think that's the main reason. You just want to double your account in less than 6 months, because the main thing at the moment for you guys to learn is the process. That is the biggest thing that you need to understand. How do I make money? The steps it takes for you to make money. Make sure that every day when you sit in front of your computer, you're doing your analysis, you do the same thing. You must repeat that same thing until you get tired of it. If it is working, if it is making you money, I know you won't get tired of it. That is the only way that you are going to make money. The problem is that you guys want to learn too many things all at once. You want to learn too many strategies. You meet this guy, he says, I'm using Bollinger Bands, I'm using MACD, I've made a lot of money, I'm using maybe this particular indicator, and you want to jump in and start using that indicator. So that way you won't really realize your goal of making money from the market. The main thing that one needs to do to be able to make money in this market and be consistently profitable is to adopt one strategy and make sure that you simplify the strategy, and that way you are definitely going to make money. Okay, I'll ask some simple questions, guys, today, so that we can try and understand where we are getting all of this wrong. Okay, Gert is saying most of the trade ideas go the wrong way. Sure, yeah, that's an interesting one, but we'll address it now. Brian is saying 99% of it. Ish, yeah, I think Brian is exaggerating there a bit. 99% is a lot, guys. Arun is also saying that's true. Guys, especially Forex. Okay. I hear you guys. Let me say Forex ideas. Wrong. Okay, guys, I'm going to I'm going to talk about some of the forex trade ideas that we've sent. Last week we sent out, I don't know how many we sent out last. Oh no, last week, yeah. This past week, because I mean the other week I was away for the whole week. I wasn't there, but I mean from Monday through Friday I was there. I think we only sent out two trade ideas, and one of those trade ideas reached its profit target. I think we may have to re-enter that trade again on Monday, the Euro GBP. We made some good money out of that. The problem is that most of you guys, as soon as you start seeing maybe like 200 from a trade, you jump out because you think you've made money. You run away. And I told the guys that were in my webinar that I actually sent that trade out, and I was looking at it. I thought it was going to be profitable. And another one that we sent later in the week, it was the GBP US dollar. It's quite choppy at the moment, but I'm hopeful that it's going to end up on the positive side. I think we're going to make some serious money from that one. And we sent out a trade, and most of you guys did not really participate there, and I think that's an opportunity lost there. I mean, we're supposed to be making money. I'm really, really, really getting involved in making sure that when you send out most of these forex trade ideas, I'm there, and I'll make sure that you guys try to make money. We need to start seeing some money coming. Okay, Andres is saying, I think we do know what his preferred strategies should be used. Okay, you think we need to know the strategy to be used? Okay, uh, okay, strategy. We'll look at that. Well, it's 45, but well, I mean, the strategy to be used. Okay. Okay. Nicolene is saying, Sihle, honestly, I receive trade ideas. I do my analysis. Then, if I agree with the trade idea, execute the trade received from QuickTrade. I lose. I've done 6 trades so far, 2 positive, 4 negative. Okay, Nicolene, we'll look at that. We were told 65% accuracy. I'm on 33. Another friend of mine trade all ideas and is furious with me. He is losing way more than I am. You must tell your friend to join us, Nicolene. You must tell your friend to join our webinars during the day or on Saturdays. Maybe his trading is going to improve slightly. Not in a big way, but slightly. Okay, Andres is saying same here. Okay, guys, I see your frustration, and this is really what I'm looking for. I need you guys to speak up and tell me what your frustrations are, so that we can try and address them. Make sure that going forward, I mean, we clear all this clutter that we have in front of us that is preventing us from making money. Okay, Frank is saying, I've been losing money on all trade ideas for the last 3 weeks. I can't even trust trade ideas anymore. You've lost faith, Frank? Nicolene, he's trading on ideas received. Nicolene, he's trading on ideas received. No, I understand. Trading on ideas received is not a problem. But like I said, you must be a snob when it comes to trading. You cannot just take every trade idea that comes your way. I mean, you must just look at it and give it one look maybe and look the other way. That way you will be able to make money. But I mean, if you take each and every trade idea that comes your way, you are definitely going to lose money, because I mean, it means you're not doing any analysis. And the main reason for us to be I mean doing all these exercises that we are doing, webinars and all of that, is for you guys to learn and be able to do your own analysis. Like I always say, if I'm sending you a stupid trade idea, you should be able to come back to me and say, but see, this trade idea that you just sent me now is not good, it's stupid. Did you not look at this? Did you not look at that? That is what I want. I want people that are going to engage with me in an objective way, and be able to give me some constructive criticism, so that I can be on my toes and make sure that I give out good advice out there, so that we all make money. Okay, Grant, stop using it. Don't trade at all now. That's bad, Grant. I want you to come back. I will show you now what needs to be done here. We trust what is sent to us. Andres, this is what I always say: don't trust anyone when it comes to trading. Even if it's Warren Buffett telling you to buy a particular stock, do not trust it. Use your strategy to examine whatever that he is telling you. Do not trust anyone. It doesn't matter who that person is. I mean, everyone is prone to making mistakes in the market, so do not trust anyone. Do your own analysis. We are learning and trusting you guys. I know, Nicolene. I know that very well, that you are learning and trusting us. But I mean, your understanding is supposed to be kind of like getting better now. I mean, I think you should come out and let us know whether you are understanding or not. But we are losing much. Christelle, timing seems to be an issue. Deciding when to use the market or limit order after receiving a trade idea. Okay, Christelle will address that one also. You're saying timing. I think you're talking about entry limits there. I think we're talking about entry limits. We'll address that one also. Sean, analysis is key. Support resistance is important for each trade. Try identify the trend. Perfect, Sean. That's the only way to make money in the market. By being level-headed, looking for key support and resistance areas, identifying the trend. No, okay, Nicolene, I understand exactly where you're coming from, and thank you very much for this constructive criticism and the feedback that you guys are giving us. I mean, with your open hearts, thank you so much for that. Gail Andrews is saying, "Hi, Sike. We seem to for okay. Let me see. What people seem to forget is that the tips are just ideas. We still have to do our own research. Yes, this is what I always ask the guys to do. That we'll give you trade ideas, but please make sure that you do your own analysis after getting those. If you don't like it, dump it. Come back to me and tell me that, Cynthia, I don't agree with your trade idea. I think it's stupid. You did not do your analysis. You did not do a good job here. Then I'll go back and have a look at it once more. You know, but I mean, it's important that you guys learn from those. Okay, I'm with Brian. So scared right now, not trading. Christelle, yes, entry time. Okay, it's fine. Christelle will look into that. I'm still on the demo platform. My frustration is that I don't get to be online as markets open, so I have to make you have to make do with the time and chance you get to go online. Take the emotion out of it. Things may get better. That is true. That is true, Gail. I agree with you on that 110%. Arun, I think fees for each trade is almost 110. Okay, Arun, you're talking about fees there. Okay. Okay, for me, Pro Trader is okay. For you, Pro Trader is very expensive. Okay, I hear that, Arun. Okay, guys, I've heard all your frustrations. I think now what you need to do. Okay, Julius is still busy typing his message, and Christelle. Okay, guys, please go ahead. As soon as you are done, we're going to go and have a look at all the stuff that you've mentioned here and try and address those issues that we could be going through currently. Julius Ndobe, just returning to trading. I've been out due to some challenges outside of trading. Okay, no, that's fine, Julius. Thank you very much, brother, for coming back. Welcome back. Well, I mean, hopefully you're going to make money. You want to make sure that you apply the right strategies for you to be profitable and consistent in your decision making. Okay, guys. Well, I mean, forex trade ideas. I've marked those. We'll pay some serious attention to them. Now let's look at okay, guys. Okay, let us try and be realistic here, guys. I would like everyone to participate on this one. How much do you think is a reasonable return that you need to make on your money per annum trading? How much do you think is the reasonable rate of return that you can make on your money trading per year? I want to understand your thinking here when it comes to this. Okay, Christelle is looking at 25%. Mpo is looking at 30. Nicolene, she'll be happy with 20 or more. Frank, anything above 30, so that's 30 or better. Andres is saying 20,000. Is that 20,000 on 100 on 5,000? I'm looking for a percentage change in your capital or percentage appreciation. Gert, you're looking at 60. Yo, yeah. Arun, you saying 20. Dave saying 30. Sean saying 30. Feng saying 60. Andres, yeah, Andres, yo, that's a tall ask. From moving from 5 to 20. Okay, it's fine. It's not an issue. Okay. Rhino saying 30. Julia saying 30. Brian is looking at 5 to 10% per day. Yo, that's massive, Grant. That's massive. Polly is saying 100% per annum. Okay. Okay, guys. Well, I mean, I get the feeling how much you guys would like to make pay. I mean, pay. Yeah. I think anything between 20 and 30% is good, guys. I think that is reasonable. Anything between 20 and 30, I think is reasonable. 100% is doable. Yes. 100% is doable, but I mean, you need to have a proper strategy that you follow, and you don't need to be in and out of the market all the time. You need to be very consistent in your decision making, and you do not need to commit all of your cash in one trade. That's the main thing. But I mean, 25%, 30%, guys, that's doable. Are you talking about 30% on 5,000? Because I mean, 30% on 5,000 is 1,500, guys. Anyone can do that. 1,500 and 5,000. I think anyone can do it. On 10,000, that is 3,000. Okay, Sean Andrews, guys, I'm waiting for your comments so we could move on. Okay, Sean, you're saying that you made 1,700 for the week with 13,500. That's good. That's actually very good, Sean. Well done. No, no, 30% per year, per year. I mean, 30% per year. You can make 30% per month, but it means you are overexposing yourself, you are over trading, you are going in and out of the market. You must understand that trading is a marathon, it's not a sprint. If you trade like this consistently in 10 years, you're going to be very far. But I mean, the problem with people is that they tend to try to make everything. I mean, all in one go, and that way they end up losing money, and they get out of the game, and they lose interest. But I mean, if you take it easy, it's not sufficient, but you are going towards your goal. You are moving towards your goal. That's the main thing. You are moving towards your goal. You do not want to make all the money today. Because I mean, the main thing for you guys to focus on right now, like I said earlier, is the process. Do not look at the money. Try and detach yourself from thinking about the money, from the emotions of losing money or making money. Focus more on the process. Yes, 30% is the best return that you can get anywhere. I mean, it's the best return. Okay, guys. Now I know what your expectations are. I'll just show you a couple of examples here. Okay. 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 Let's do this. Can anyone give me, okay, you guys, please give me stocks that you'd like to have a look at. I want us to look at those shares. I want us to understand where those shares are going. That if you put in money on those shares and keep maybe those trades, maybe for for 2 to 3 months, how much you can make. Because I mean, the problem is that you guys want to be busy, you want to go in and out of trades, and that costs you a lot of money at the end of the day. Okay, let's look at BAW. Okay, let me just write this down. BAW, PIK, TRU, RMH, VOD. Okay, EOH. I know some people lost money on EOH. I know some people lost money on EOH, guys. I will show you what's going on. We're not, Frank. I know, Frank. I believe you do accounts. So it's important for you to understand maybe the fundamentals of the business for you to understand whether the business is improving or not. So, but I mean, in this session, we are not really going to be looking at the fundamentals. We're not really worried why the market is falling. If the market is falling, we want to sell it. If the money is, being made in selling, we want to go in and sell the market. Okay, I've got EO8 already. Okay, let's look at Barlow first. Let me remove these drawing tools here. Remove all. Okay, guys, please pay attention now. I want to try and explain this to you. This is the monthly. This is the monthly time frame. If any of you do not know how to do that, this is how you do it. You see at the top there where I have my cursor, where it says, let me see, what does it say? Use predefined aggregation types. You click on that, time. If you don't have one M, one capital M, one small m or lowercase is 1 minute, and 1 m with a capital M is a month. You go to edit. Go to edit. After that, you're going to get one of these. These boxes with a plus sign in them. Click on it. It says add new. When it goes to period, when you go to period, go to month, because you're looking for a month. If you're looking for a week, you're going to pick a week. If you're looking for a day, it's a day. If you're looking for a year, it's a year. So here we are picking a month. We are looking for a month. The value, we'll keep it at 1 as is. Then we go apply and apply again. When you go back to your time, you should have your one capital M amongst the time frames that you have in there. Okay, now we have this 1 monthly time frame. We are using candles. What we use the 10 simple moving average. This is what we do. We do this. You go to you right click on your screen and go to indicators. Say add indicator. Click on that, and we are looking for a moving average. We have moving averages here. We have 10 moving averages. The one that we're looking for the simple moving average, SMA. Period of simple moving average. The default setting is 1. You can just highlight that and type 10. We now have 10 there. And go down to OK. Now you have your red line running below your price. If you want to change maybe the size of your line, you come here, You click on this spanner here and you go to the simple moving average properties. You go to line properties. There's this button in the, sorry, there's this line in the middle here. You click on it, it gives you different sizes, and you go okay. Now your line is thicker. I think maybe it's now clearer. Why do you use the 10 simple moving average? We use the 10 simple moving average to understand the main direction or the direction of the market at a time. We want to know whether we are buying or we are selling the market. We want to understand whether we are buying or selling the market. When the price is moving below the moving average, the 10 moving average, it means you cannot buy that market. It means the sellers are in control of that market. They are pushing the prices lower. So you are going against the trend if you are buying that market. Do not buy it. You must sell it. Once the price emerges above, it has to emerge and close. At the end of the month, you get the full bar like this. I've got Makesa on April 2016, end of April 2016, we closed above our simple moving average there. Guys, this is powerful. This is a powerful strategy. Do not for a second think that it's useless. It's very important. I need you guys to pay attention, because I mean, this is the strategy that I want to use each time you receive trade ideas. Make sure that it agrees with the trade idea. If the trade idea does not agree with the strategy, do not take it. Okay, the price crosses above your moving average and it closes there. It means that the market is now positive. The buyers are now coming back into the market. So what do you do now? You need to now, maybe after this, you need to go to a lower time frame. If in 2016 you decided to go and buy Barlow World at 82 when it closed above the moving average. The following month it was down. It was down almost 13%. But I mean, if you are using this simple moving average as a guide, you could have just gone in, bought some Barlow World at 82 and just left them. As long as the price is still above your moving average, as long as the price is still above your moving average, you hold. Even like right now, the market has been pulling back. The market has been coming down over the past couple of days. I know the volatility that's there in the market, it makes a lot of money for the stockbrokers, because I mean, people panic. They go in and out of the market trying to time the market without really understanding what they are doing. And in doing so, they end up losing a lot of money. If you use this as your guide, that as long as the price is trading above the moving average on the monthly time frame, it means that that price is rising, it's appreciating, then you will make money. Like Barlow Wells right now, Barlow Wells is still a buy. You just need to make sure that you get support and resistance levels, because you know the trend is up. I wouldn't be surprised to see Barlow World at 200 and maybe 220 in the next 6 months. It's possible, but most of you would have lost money getting in and out, trying to time the market, getting in and out. Yes, timing the market is important, but the most important thing, once you've identified the trend, is to time your entries. That's where support and resistance comes in. Time your entries, check where you can get involved in that market. That's the most important thing. Is everyone happy with that? Do you guys understand what I'm saying? Using your monthly time frame. I know not a lot of people out there use that. Not a lot of people use the monthly time frame to try and time the market. You guys are very lucky that you are learning this strategy very early. Please take it seriously. Make sure that you apply it. You try and practice what I'm teaching you here. I'm telling you, in the next year or so, you are going to be making like real money, more especially if you are not going in and out of the market all the time. You do not jump out of a trade as soon as you see 150 rand or 200 showing as profit in your account, because I mean that's one of the reasons sometimes why people do not make it in the market. As soon as someone sees 50 bucks, he takes it, but he lets his but he lets his losses run. We have people that are losing more than 200,000 on one trade. The person is holding on to that trade thinking that one day it will reverse and become profitable again. It's a wrong mentality. Okay, the challenge are swap fees on keeping shares even if it's high. Okay, we'll address that. We'll address that. I will show you what you need to look at. But I mean, the main thing now is for you to stay on the right side of the market, to stay with the trend, the current trend, and not going against the trend. Okay, Feng is saying, how do I decide when to get into the market, into that market? Well, I mean, the first thing is that you know that the market is trading above its I mean simple moving average, that 10 simple moving average. So that is positive. It means that it's the buyer's market or it's the bull market. The market is moving higher. So I will go to the next step where you go to a lower time frame. We now need to go to our maybe daily time frame, weekly time frame. But I mean, before you do that, I understand that the market is going up, but now you need to understand where your key support and resistance areas are. I'm not going to do that right now. I am going to move on to other shares and just show you how those shares are looking. Like, I mean, at the beginning of 2017, the market was moving sideways. It moved sideways, but eventually it went higher. People made a lot of money. Even if you had just taken trades on this, even if you are trading cash equities, you could have made a lot of money buying Barlow World last year. Well, I mean, it was easy money. Okay, okay. Feng, are you happy with that? That you first have to check what your moving average is looking like relative to your price on your monthly chart. If it's looking positive, it's above, it means that that's a buy. Or if it's trading above, it means that it's a buy. I think you must make a serious I mean, mental note on that one and have one on a piece of paper also. Feng, when would it be proper to get into Barlow World? Okay, that's what I was talking about when I said you must now understand where your support and resistance levels are. You must understand where your support and resistance levels are, but I do not want to confuse you right now. I want us to go through all the shares that you guys submitted so that I can show you how they look. After that, we'll come back and have a look at the levels that you can use to enter the market. Frank, I'm having challenges with swap fees when keeping trades. Okay, Frank, I understand, but I think the main reason why you keep trades is because usually maybe you are on the wrong side of the market. Because I mean, that's the only reason why you would want to maybe keep a trade for an extended period of time, just because the trade is going against you. You do not want to let go of it, so you are keeping it. While keeping it, you paying swap fees. Another thing, you must understand that when you are long, you pay those fees. But I mean, when you are keeping a short position, you get paid swap fees. They pay you if you're short. There are so many other shares that you can short in the market that can make you money. That if you had maybe went short on them like last year, beginning of last year, you could have just sat on them and made a lot of money because you are short. No one is charging you anything. The only challenge comes when you have to pay out the dividend. But I mean, if the stock is down 10-15% for the month, and the dividend that you need to pay, maybe the dividend yield there is like what, 5% of that, and you don't pay that every day. Well, I mean, on some platforms, when you are short, you get paid the dividend. But it depends on the currency pairs, because you know currency pairs, some economies have higher inflation numbers. So if the inflation number is higher on the on one currency and lower on the other. So I mean, there may be an issue there. But I mean, if you are short, you should be paid some swaps. But I mean, in forex on this particular platform, there are no there's no interest or swaps that you receive if you are short on forex. Eric, why when I buy forex do I always enjoy the market higher than the ask? I'm not getting your question there, Eric. What are you referring to specifically? Maybe you can hold on to that question. We'll address it later. Let us know when you enter. Okay, let me see. Why when I buy forex do I always enjoy the higher than the ask? I don't know how to address your question there because I'm not. I think I'm not understanding you clearly, Eric. But I mean, what you should do every time when you want to buy it, when you bound to I mean submit a buy order, you must make sure that you have a limit in place. Make sure that it's a limit order. When the market, even if the market is higher, the market maybe will retrace, come back to your to your entry limit, kick you in into the market, and you're done. Do not try and buy maybe the what can I call it? I mean, at market prices, unless if you can see that the market is really running. If you are chasing up a stock, yes, you can do that. You can do that, but I do not really recommend that you do that. Okay, now let's go have a look at PIK. So I think we all agree that World is on a buy signal since early 2016, still trading above its moving average. So we are happy to hold some longs on World. The issue is, where do we get to buy those positions, or when do we get to go in and take some longs on World? That's the big question. We'll come back to that one quickly. Let's have a look at PIK now. Okay. We're now going to have a look at PIK. It's busy loading. Okay, PIK. Let's look at okay, late last year, end of November. I don't know if you guys can see it and see this. Late last year, end of November, PIK closed at 63.65. That's where it closed. It closed above the moving average. If you compare 63.65 against the 62.66 of the simple moving average, the price is higher than the moving average, which means the price closed above the moving average. That was a positive sign for one to go in and start accumulating some stock on on Pick and Pay. They were supposed to go in and buy December. The stock jumped up 11%. Well, in Jan, we're flat, we're down 1.8. Feb, we're up 2%, and currently we are down 10.43%. But the main thing to note here is the fact that we are still trading above our moving average. So my feeling is we may still grind higher on Pick and Pay until I see the price breaking below and closing below the moving average there on Pick and Pay. I would be a buyer of Pick and Pay going forward. But the main thing, like I said earlier, is to understand the levels where you can go in and buy the stock. You see here in October 2016, the price crossed below your moving average there, and the bar that I've just highlighted there, the price closed below, and after that the price did not really manage to close above the moving average. As you can see here, it started moving lower until it got to the support area. There was some serious support around 57.62. That's a level that you need to keep an eye out for on Pick and Pay. Even if it does come down at a later stage, you must have a look at that and see what happens when it gets there. It's an important level that you must really keep an eye out for. Okay, Feng is saying, since Pick and Pay is going down, even though still above the moving average, is it not the best time to sell it? No, it's not the best time to sell it because you are going against the trend. The main indicator that you are using there, you are using the simple moving average. And what the simple moving average is telling you right now is that you should remain on the buy side. So if you want to make sure that you do not get run over by the market, is to remain on the right side. This pullback that you are seeing happening currently on Pick and Pay is a discount that the market is offering you. The market is giving you a discount so that you can go in at a better price, so that when the price starts appreciating, you get to make money. But I mean, what I'm saying is you do not need to jump in right now. You do not need to jump in. What I always say to the guys when I'm teaching on these webinars is that when the price is pulling back on an uptrending market, you must make sure that you do not sell it. You can only do that if you are an aggressive player. If you're an aggressive trader, you are experienced, you know what you're doing, you can do that. But I mean, if you want to be conservative, disciplined, you won't try and sell that market. You'll wait for the market to move in your direction first before doing anything. Like here, let's look at this bar here. This was end of December. We achieved 11.1% on Pick and Pay. So if you made 11% in December, there's no need for you to panic. If your target is 30% a year, how many shares you need to make 30%? You don't need too many. Even if you can get 3 or 5 shares a year, you've achieved your target or you've made your money. So that is the main reason why people should spend more time sitting on their hands than pulling the trigger all the time and trading, trying to make money. That's the main reason why you lose a lot of money in the market. You must try and avoid that. You must try and avoid the temptation, because I mean it's not a good thing to do. Okay, let me check. Andres is saying, what is the difference between the limits? Oh, okay. Between a limit and a market order. Okay, a limit order is when you specify your own price. You naming your price there. You're saying that Pick and Pay is currently trading at 68, but I'm not willing to buy Pick and Pay at 68. I would like to buy it lower. Maybe when it gets to 65, that's when I'm willing to go in and buy Pick and Pay. You are naming your own price there, so that is the limit order or the limit price. You want your own price. You do not want to take anything. Whereas the market price is the going price, the current price. If the market is saying Pick and Pay is, sellers are selling at 68, that's the price that you can, take only if you want to go in and buy that market. I don't know if that makes any sense to you, Andres. Oh, okay. You got it. Okay. Frank, okay. You've held on to a long position, only to see myself kicked out when it has gone the opposite direction and losing. I understand what the problem is there. The problem is that you are not trading with the main trend. That happens a lot. If you are not trading with the main trend, that's what you will experience most of the time. So you must make sure that you trade with the trend so that you can make money. If you are trading with the main trend, chances of that happening are very slim. You will never get such happening to you if you're on the right side. Okay. You're saying, Frank. You're saying, can you introduce a trailing? I think you're talking about a trailing stop loss. Frank, am I right in saying that? Do you understand? Okay. Well, I mean, it's very easy to do the trailing stop loss, Frank, but it goes back to the levels that we spoke about earlier. You need to understand where support and resistance levels are, because I mean, you cannot just keep adjusting the stop without. You do not need to violate your support and resistance levels. You need to make sure that you're on the right side of the market before you adjust those stop losses. I'll show you what I'm talking about. If you're a short-term trader, you can always adjust your stop loss based on based on maybe the current day's close or the current day's low. You can always do that, but I mean, automating it does not make sense to me. I think it makes sense to manually adjust it each day the market closes. I think that one makes better sense for me. Okay, so we all agree that Pick and Pay has been on an uptrend since, on a buy signal since in November last year. So people that got involved in December, January, Feb, and March, they are still profitable, although some of their profits have been taken away. But I mean, they are still looking good. Okay, now let's go and look at and have a look at TRU, Truworths. Okay, here is Truworths. Truworths had I mean the same type of setup happening here. This was in August 2017. Although it was very choppy, it went above its moving average. It came back down to its support. Support on Truworths is around 67 68 levels. That's where support is on Truworths. I know that some of you guys cannot see that, but I know where that level is. I will show you later. Please remind me to show you support and resistance levels using the monthly time frame so that you can understand how the overall picture looks on a stock. So it's been going up. It in December it was up 16%, 3% in Jan. Feb was flat. Currently it's flat also. We're up just 1.31%. So people are supposed to be. Well, I mean, people should have been they should have been buying Truworths, not selling. Let's look at RMH. RMH also, you see, is trading above its moving averages. Sorry, above its moving average. So the price is moving higher. Currently, the price has just pulled back. I've been telling the guys. I mean, in our webinars during the week, that this is just a normal correction that we are seeing in the market. As long as we are still trading within the levels that we are trading in, I'm happy that the market is going to reverse and start moving higher at some point. But currently, I know a lot of people are panicking, but I mean, there is no need for that. If you are using that moving average is guiding you, is telling you that the market is still on an uptrend. Okay, the next one we're going to look at is Vodacom. Vodacom has been trading sideways. We have some nice support levels there that we can look at if you need to take a long on Vodacom. But overall, the trend has been moving up. Currently, we are moving sideways here. We are in consolidation. We are moving sideways. We are not really moving higher. We're just going sideways. So there isn't much that you can do about Vodacom. Although Vodacom is closed above its moving average end of January this year. So the key issue to look out for is your March end. At the end of March, you need to check where Vodacom closes. If it closes below its moving average, there's a good chance that we could see Vodacom maybe coming back down to 144, 140 levels. But I mean, if we close above our moving average there around 161, 162, it's possible that we could see this price grinding higher a bit, going towards 180, 185 levels. Right now, Vodacom is a little bit confusing in terms of the monthly time frame, but I believe we may have a positive close to the month of March. EOH, very interesting share. Okay guys, let's all pay attention to this one. The first time we broke below the moving average on this stock was in End of Jan 2017, we crossed below and the price started declining, 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 declining. It's been falling all the way. So no one was supposed to buy no one was supposed to buy EOH since this break below the moving average. You see, every time it's trading above the moving average, here this was around 2014, it just moved higher, higher, and higher, and higher, and higher. Okay, Andrews, you're saying all we've been discussing is the long. What about the short? When do we short? Okay, this is an example of a short, Andrews. We're looking at EOH. The break that we had below our moving average on EOH was the end of Jan 2017, and the following month, Feb, we're down 5%. 1%. This month we're up. It was because of this support area that we have here, and we went down 11%. Here we're down 14. Like a month to date on on EOH, we are down 27%. Well, I mean like 28%. So there is no need for anyone to try and buy EOH currently. There is no need. Every time you get a sell signal on EOH, you just need to go in and sell it. That's my view currently. Okay, let's move on to MTN. Well, I mean, MTN has been moving sideways a lot lately. That's mainly due to the depressed oil prices. I mean, the oil price has been depressed for a very long time, and they have a huge presence in Nigeria, and Nigeria is very big on oil. If oil prices are depressed, stocks like MTN really feel the pinch. So that's the main reason for me basically on MTN when it comes to fundamentals. Okay, let us now try and get rid of all these lines here. The moving moving average on MTN, people were supposed to go short MTN around November 2014 when it first broke below its moving average here, where I have my cursor. It went up briefly. It was just 1 month, and the following month it was below the moving average in May 2015, and it started falling, and it had been falling since then. So no one was really supposed to go in and buy MTN until we had this break above. When we had this break above, that was in August 2017. That's when people were supposed to start going in and buying MTN and positioning themselves to take some long positions on MTN. The following month it was down, but we're still above the moving average. In October we're down again, but above the moving average. The moving average was acting as a dynamic support. It was helping the price up, and in November we're up 5%. December we're up 5.6% again, and in Jan we went down, Feb down, March we're down, but we haven't we have what we call here I call it an intra month. We are trading we are in the middle of the month. We haven't really finished the month. Only at the last day of the month we're going to find out exactly whether the price is closing below the moving average or above the moving average. Currently it's below the moving average, but you cannot use this as a signal to sell MTN. As far as I'm concerned, MTN is still looking good. Every time it gets to 120, every time it gets to 120 levels, 122, people step in and buy MTN. So around those levels, I expect to see a bit of a bounce on MTN, taking us maybe back up to 128, 130 levels. But I mean, if we get a breakdown here, we may come down maybe to these levels here, down to 113. But I mean, that's not what we're talking about. We're not analyzing MTN. We're just checking the structure of how MTN looks currently. Currently, we're trading below the moving average. There, we've been declining for the past 3 months. Currently, it looks like it's a little bit confused, but around 122, 121 levels, we have some nice support, key support area there. I think we're going to see a bit of a bounce around those levels there. Okay, okay. Now let's have a look at MRP, Mr. Price. Mr. Price, the first break above the moving average was in July 2017, and that's when people were supposed to go in and buy Mr. Price, and Mr. Price has been climbing since then, and it's been climbing since then. Well, I mean, some 2 months in 2017. In those 2 months, we saw the price declining for a bit. This month, we're down 2.5 to 2.5%, which is very minor. And this other month also, we're down 3.4%. And here in November, we're up 18%. That's massive. Again, in December, we're down close to 18% again, and January this year, we're down 16.8, close to 17%. And in Jan, we've been flat, we've been moving sideways because we're down only 1.13%, which is nothing. And currently we are down 0.21%. We're only down 21 basis points. 21 basis points is nothing for a stock that has been climbing for such a long time. So in my view, MRP looks like it's still looking good for a buy. I will look at support and resistance levels that we are checking on MRP for maybe some possible shorts, but at the moment it looks like it's still on a buy. If you buy this one, you're not really going to lose your shirt, but I mean, you need to wait for a buy signal before jumping in and buying Mr. Price. So is okay. Sean has a question. Okay, so do you always look to buy or sell based on the SMA with a period of? Yes, that is true. That is true, Andres. Sorry, Sean. I always look to buy or sell based on the simple moving average. The period is 10 using the monthly time frame. I always do that to check whether it's good for me to go in and buy or sell the market. That's what I do all the time. It works both ways, Frank. Because I mean we haven't gone down to a lower time frame yet. It works both ways. If you have maybe a share portfolio, a long-term share portfolio, you can always use this strategy to understand whether to keep your investment or to sell your investment. If it starts maybe breaking below, you know that maybe it's time for you to get rid of it and look for those that are going across, going above your moving average. You can do that. It can actually make you a lot of money, keeping you in your right positions. For short-term trading, the same strategy works. I will show you how. Sean is asking, is that a norm or your opinion? I don't know what exactly Sean is referring to. Could you please be more explicit on that one, big guy, so that I can try and address it? Okay, Sean, I'll start with you first. Okay. Okay, let me just quickly address your issue there, Frank. Frank, you're saying, but remember, we are mainly using CFDs and not buying the real shares. Okay. Uh, Frank, this is where you begin if you're analyzing a share. This is the only reason why I'm showing you the monthly. This is where you begin when you're analyzing the share. You still have to move to a lower time frame. You still have to move to a lower time frame, but I mean, this is where you need to begin when analyzing the share if you want to do a thorough job. Okay, Sean is saying refer to. So, do you always look to buy based on okay time factor for long term? Would you use CFD or just equity? If you are if you are creating a share portfolio, it makes sense to use cash equities. It makes sense to use cash equities or use what do you call these ETFs or cash equities, yeah, cash ETFs. If you want to create a long-term portfolio, you cannot build a long-term portfolio based on CFDs, because I mean there are swaps, there are other fees involved, so you do not want to end up losing money unnecessarily there, paying away some swaps. So it's cash equities all the way if you want to build a long-term portfolio. Uh, yeah, cash equities for yeah. Okay, we've had a look at the structure using the monthly time frame. Now let us try and look for support and resistance levels using the monthly time frame. Okay, guys, please pay attention to this. I want us to have a look at support and resistance levels using the time frame. Usually, what I do, I change to a line chart to pick the turning points. Every turning point is important on a chart. Every time when you see a turning point using the line chart, you must understand that there is something happening there. You must try and dig a little bit to understand why. Yes, we do have both products there on Pro Trader, Frank. We do have that. Okay, guys, I'm waiting for Frank to finish typing his comment there so that we can move on. Otherwise, it's going to be left behind if I. Can you show us, please? Seems relevant to what you are teaching us. Okay, let me check. How do you get that? Okay. You go to your you go to add add okay, let me just come here. Let me just come here. You go here. You see here under JSE. Under the JSE, you have two products there. You have CFDs and you have equities. If you want equity, you go there, JSE equities and ETF equities. These are ETFs here at the bottom. There is a whole lot of them. You need to know which ETF you're looking for and what you're trying to achieve through that ETF. And JSE equities, they're all here. These are cash equities. If the share is 10 rands, you pay exactly 10 rands. If it's 15, you pay 15. So that is why we call them cash equities, because you pay cash for everything that you buy. With CFDs, it's a down payment or the margin, what do they call it? The margin payment that you put down to participate on an instrument or a derivative. Okay, Frank. Okay, perfect, big guy. You're welcome. Okay, now we are trying to get support and resistance. So what I was saying earlier is that each and every turning point on a chart is important, especially if you are using a line chart. What you're using now is a line chart. So every time where the market turns, you must mark that area and understand that when the market maybe comes back to that area at a later stage, that area could act as either your support or your resistance. So these turning points are very important. Right now, we're going to draw a horizontal line here. This is where you're going to draw a horizontal line. That horizontal line is sitting at 270 on Mr. Price. There's another turning point that we have here. I think you guys can see it. This is the turning point I'm referring to. the dotted part, the dotted turning point there. And another turning point that we have is here. You see this one here? This is another turning point. Put your line there. I do not want us to end up having too many too many lines. I think we'll just leave it at 3. There's another turning point here where we are supposed to put another line. We're supposed to put another line here, but let us not do that. Maybe let's try and go maybe to the bottom here where the market turned. Okay, maybe let's first do resistance here at the top. Okay. This area on Mr. Price was our resistance. And why is it not resistance anymore? That resistance was invalidated by this break above 270 that was in January, end of January. The price closed above that area, and in Feb, the price tried to come down. You see the lines that we drew, that those turning points, the market tried to come down here in Feb. There were buyers waiting here using that turning point. They went in and they pushed the price up, and the price closed above both lines, and we closed above the area that the buyers had claimed end of January. So the buyers are still in control, and we are above your moving average here. And currently, the market tried to come down again. The sellers tried to push the price lower. They were pushing the price lower towards 270. The lowest on the monthly chart is 271.75, and buyers stepped in again using this same line that we have here. They stepped in and they pushed the price higher. So month to date, we are up 2.7%. We are up 2.7%. So currently, Mr. Price is trading above its resistance. So this resistance has now become support. So around 270, 271, Mr. Price is supported. If the price crosses below, even on a monthly closing basis, closes below that, you must know that maybe the prices are likely to come lower going forward. But at the moment, I'm happy with what I am seeing there. Now let us change to a lower time frame. The lowest time frame that I want us to stick to currently is the daily time frame. You go to time, and you go to 1D, the daily time frame. That's where you go. Let us try and get more data. If you want to get more data, you go to 6 months here. The default number of months that you can get is 6 months worth of data, but you can get more than that. We're going to try and go for 15. We have 15. We have 15. So let us try and make this a line chart. On a line chart, because you can also draw lines or horizontal lines on these turning points. I've just made this one bigger. This is a turning point. This was on the 15th of Feb this year. This is a turning point here at the bottom. That was on the 20th of of Feb. The market went higher again. This was the 26th of Feb. Came down here on the 2nd of March. Up there on the 7th of March again. And recently, this is where we went. This is the turning point that we have. I want us just to concentrate on these for people that are short-term trading. Are you guys following? Are you guys happy with the idea of these turning points and how to mark them? Okay. Okay, guys. Thank you so much. As long as you are following, thank you, thank you, thank you. Okay, now we want to draw our horizontal lines here at the top. This is the first turning point that we have. We're going to draw a line there. Don't worry that it doesn't connect with the other line or that the other line is above. Don't worry about that. We're drawing another line here at this turning point here, the one on the 20th. But I'll start here. Don't worry about, well, I mean, you can worry about these, but I mean, let us not worry about these at the moment. But I mean, you can draw another line here. Let's just do it. This is the turning point on the 2nd of March. We've just drawn a horizontal line there. We'll draw another one here. This is the turning point. You see these two? There's another one here. We'll draw these lines again. First line is here. The second line goes here, just above the tip of this one. Because we are using this, we are using the line chart to get these turning points. It's easier, more especially if you're starting out in trading. It's easier to get these turning points using the line chart. So we are now going to change it to a to candles. The reason why we are now changing it back to candles, we want to see the highs and the lows, because I mean the line chart does not show you the high for the day, the low for the day. It only shows you the turning points. Now let us, you see now this picture is now getting a little bit funny. So you see, every time the price comes down to trade around these horizontal lines, the first horizontal line is at 273. You see the price came down from the top there on the 7th. It came down to support. This is where your support is currently using the daily chart. There is no indicator that we are using here. We are just using price action. We are just using the chart structure to understand whether to buy or sell the stock. So around 273, if you've marked all your lines there, you know that around those levels, if the price reverses, we should actually go in and start buying Mr. Price around 273. It went, it hit 273, sorry, on Friday. The price went up. It closed positive. We're up 2.9%. We're up above both our lines. This one here, 273 and 277. The only line that acted as resistance that we could not finish above or close above is 283 or 282. You see, when the price got to this line here, I'll highlight it. I want you guys to see this line. And I will make it a dotted line. You see, when we got to that dotted line, we could not finish above that one. We did not close above. So that is where the sellers were, that is where resistance is, and that is where our moving average is. Our moving average also acted as our dynamic, what can I call it? Dynamic resistance. Our moving average there. And we hit 285. After 285, we came down. So on Monday, we want to see how the market is going to open. If the market is positive on Monday, it is likely that we're going to have a follow through on the long side. We're going to have another positive day. If we get a follow through on the long side, our next area of resistance, I'm talking about the main resistance now. This is still our resistance, these lines that we have here. You must mark these lines and check what the market does on Monday. You must mark these lines and check what the market does when it opens on Monday. If the market closes above these, it means that you've taken out this resistance here around these dotted lines. And the next area of resistance that you should look out for is 293, 291. 292, 293, 291, around there. This is the main area of resistance that we are looking at. So you want to see your price maybe closing above your daily moving average. We are using the same strategy. You must make sure that your monthly and the daily, they communicate the same language. If the monthly is saying buy and the daily is saying sell, you do not take the trade. You wait for them to agree first before you take a trade. Yes, you wait for the one day to agree with the monthly. Once they are both in agreement, you go in and take the trade. That will eliminate a lot of stress from your trading. It will take a lot of stress away from your trading. That is if you haven't understood your support and resistance. Because sometimes, I mean, using support to go in and buy here is a good thing, but you must understand where your support level is. If once you know where your support level is and the market gets there, you check it, it gives you a positive sign. You can to look for those signs, you use the hourly time frame, you use the 4 hourly time frame. You can use those. But if you are still new in trading, I suggest that you stick to your daily time frame. That way, you will be able to trade stress free and you will be able to make money trading stocks. Are you guys following me? Does anyone have a question? Do you understand the stuff that I'm trying to show you here? This is how it looks on a line chart. So these are the levels we are looking at, and next level we're looking at on MRP is that 291, 292 level. If we take out 292, 291, the price has a higher chance of moving of grinding higher. So we're watching for those levels. Every time it comes down to 270, 272, 271, you know that that's an area that you can buy. That's an area that you can buy. Okay. I think we are done with MRP. Now let's go check MTN. I'm starting from the bottom now. Let's go check MTN. We'll go to our larger time frame first, the monthly. It's been moving sideways here. I think it's going to be very difficult to analyze this one, but I mean, let's see if we can pick those turning points. Let's start here from the bottom. We're marking this one. That was 2016 November. This is the turning point that we have there. These turning points are very important because I mean they are they are big levels that the big guys are looking at. The big guys are looking at these levels every time when the market goes down to those levels. They use that or they take advantage of those going in and buying the market, while the small guys are running away thinking that the market is falling and the world is coming to an end. You see, this turning point here was in 2016. May, is that May? Yeah, May. I'm going to put another horizontal line there. There's another one that I can put here. Here also, I can put another one here. I'm marking this turning point here, 2017 Feb. Horizontal line I've just drawn there. So let's try and make this bigger. Let's try and make this bigger. Okay. At the top, we're going to try and draw some lines at the top also. We're marking this turning point here. That's our horizontal line there. We have another turning point. We're marking this turning point here around 139.73. And there's another one that you can put here, but I don't know if we should do it. Maybe we should. Maybe no, maybe we shouldn't. But I mean, you should mark this one also. It's a turning point. You should mark it with a horizontal line. You should mark it. But I mean, will not do it. Let's mark this one here. We're marking this one, December 2015. Okay, December 2015. There's another one here. Okay, let's mark this one. But I mean, let's make it stand out, because I don't think that is very important. We'll make it stand out. We'll highlight it. We'll make it a dotted line. There's another one that we have here. There's another one we have here. But I mean, let's not worry about those. The price is trading below those now. Let us now change to our candles. Okay, let me make this bigger. I don't know if you guys can see that. Is it bigger? Yeah, bigger. You see, when the market went up to one of these lines, 140, if you are vigilant and you've done your homework, you know that around 140, 139, maybe 99, somewhere there, the market is likely to reverse. Because I mean, you have your line. The market hit there in January, and it started coming down. We had it closed below this support, and this support became resistance. In Feb, it went lower. It hit this these two at the bottom here. It's 119 and 122, and the market went up, but it failed to close above 133. In March, currently, the price tried to go beyond 133.10. This highlighted bar here, it tried to go beyond 133.10, and sellers came in, pushed the price lower, but it came down to 119, 122 again. Buyers were there. Buy orders, we had some serious buy orders around 119, 122, and they pushed the price higher, and the price is now in the middle. Currently, the price is in the middle. We don't know what's going to happen next. Sorry, let me update this one. Let me update it. Okay, okay, this is another trick. If you don't understand what is going on, you must just go to refresh to make sure that you get the right price. So currently the price is sitting around 122. What are the close? 122.77. So when the price of MTN maybe comes down to, I need you to watch out for this. When the price of MTN comes down to 120, 119 on Monday, Tuesday, Wednesday, whenever, every time it comes down to 120, 120, 122, that area, there is a lot of support around that area. Buyers, this is our buy zone around here. This is our buy zone. 122, 120 on MTN. There is going to be a lot of buying interest in the market. You must check what happens when the price gets there. But what I need us to do now, I want us to move to a lower time frame, the daily time frame, to check what we can pick up there. Refresh. Okay. Okay. You see, on the daily time frame, when the price went up there, it hit that area, it closed below the moving average, it went up. Sellers came back in again, reclaiming that territory, and the price closed below the moving average and started moving lower. But because the monthly moving average is saying we should buy, let us respect this. We can see that the price is starting to come off, because on the daily, you can use that same strategy again, that the day that the market closes below or above the moving average in a daily time frame, you go in and buy. But I mean, if it is in conflict with your monthly time frame, there's no agreement between the two, you can just leave the trade. You can just pass it and never trade it. And the price moved lower. It moved to our support 122, 122, 119, 120. Buyers stepped in, they pushed the price up. You see these long tails here, they show that there is a lot of buying interest around here. They bought the stock, and the stock went up. It came down, it went up, it came back down here to 120 again. Buyers stepped in again, and they pushed the price up, pushing it higher there. So right now we are waiting to see how things are going to play out on Monday. On Monday, we're looking for 122 and 120. We want to see what happens in this zone here on the daily time frame. We want to see what happens in this zone here. I expect market to reverse here. I want us to have a blue or a green bar here around this area. From there, I expect the price to go up towards 133, 134 again. That's what I expect to see happening on MTN on Monday, Tuesday. Do you guys understand? Are you happy with what I've just shown you? Does it make sense to you? Thanks for honesty, Andres. I'll go and explain. Okay. When I began looking at this one, I said, let us go and have a look at a monthly time frame. Let's have a look at a monthly time frame. I said, let us make it a line chart. I said each and every turning point on a chart is important. I need you guys to underline that one. Mental notes, mental underline, underline that. No, guys, it's fine. Don't be too hard on yourselves. If you don't understand, it makes sense. It's still early days. You will understand as we do more of these. We're still gonna do a lot. Each and every turning point is important. Okay. Sure. You can go back maybe a few years, maybe like 3 years. 3 to 4 years, yeah. You can go back maybe 3 to 4 years because I mean we are using a monthly time frame. The reason why I go back so far in time, Andres, is because I mean the market, like they say, history repeats itself. The market respects all these levels. It doesn't matter how far back that level goes. The market will always respect it. So it's important that you go back a little bit more. I know that when you're starting out, they don't teach you that you must pay attention on levels where the market had once broke before. Like, okay, let me show you. You see this level here. This was back in 2014. This turning point, the one with the dotted line. It's very important. If MTN can take out 150, the levels that we're going to be watching out for is 197, 200 levels. Because we know that when the market gets there, there's going to be a huge battle between buyers and sellers. Buyers are going to be trying to overpower sellers and reclaim that area, and sellers are going to be pushing down the sellers. Sorry, pushing down the buyers. So it's more like when in rugby, what do they call it? It's a scrum where you see the two sides. The other side is trying to overpower the other side, and the other side is trying to push against the opposition, something like that. That's what happens in the market. When the market gets to these turning points, there is a lot of fighting that happens. Buyers trying to overpower sellers to go through beyond that area, and sellers trying to push away the buyers to maintain that area there. I don't know if I make sense, guys. I don't know if that makes sense to you. So so all the lines that I've drawn here, okay. The immediate support that we have is this line here, 122. Let me highlight it. Let me make it bigger. That is your support there at 122. And your next line of support is at 119, 120. Andres, you're saying what happened when the market went down so much? What do you mean? What are you referring to? Are you talking about the market maybe reversing from 137, 140, coming back down to where it is currently? What are you talking about? Graph line in the middle. Okay, are you talking about this point, the highlighted one, going down to our current levels, Andres? Yes? No? Like this? Feng is saying when do you ID support and resistance point? Oh, okay. Mm. Are you talking about what? This drop here? Please finish that one so that I can carry on. Oh, okay. Well, I mean, it goes back to what we said. The price broke below the moving average and it started selling. There was more selling pressure. The price just came down. We don't even want to know the reason sometimes why we should buy or sell the stock. As long as it is broken and is trading below, we just go in and sell the stock. If you get a trade idea that says sell, you must know that it's a genuine idea. If the setup looks like this on a chart, then you can just go in and buy, and sorry, and sell. So now let's go back to our hourly time frame. Now let's make it a bit more. Yes. So we know. Okay. You can mark these levels. So maybe you can check them on Monday or Tuesday. Monday, Tuesday. Please do your homework. Go through MTN, the daily chart. I want you to write these levels down: 122 and 120. 122 and 120. I expect the price of MTN to reverse around 120, 122. And I need you guys to check that out. That area is support. And I expect the price maybe to go back up to 133, 136 area. 133, 136 from 120, 122. That is where your support is on MTN currently. I expect the price to reverse there. It's been, MTN has been very volatile lately. It's not been as an easy stock to trade, more especially if you're still new in trading. It's been very tough trading MTN. Okay, guys, I'm done with MTN, and now we can move on to EOH. Maybe EOH is going to be our last one. You can't spend 2 hours on a webinar, guys. Don't want you to lose your attention. If you want to stop, you can just you can tell me to stop. I will stop. I understand that it's been a long time now. It's about 1 hour 40 minutes. Okay, I've got my lines drawn already. EOH has been declining. Okay, let's do this. This is the turning point that made me draw this horizontal line that I drew there. Can you all see it? This is our resistance. We expect this area to be our resistance, so we are going to draw a horizontal line there. Price came down. These levels were important also for short-term traders, but I mean, because I mean this thing has happened already. It got here, it went up, and we drew another line here because I mean this is a turning point. So this point is very important. It is now acting as our, well, at a time this acted as our support at one point, and we have another turning point here. This is the turning point I'm referring to. Yes, I can do webinar on forex. Yeah, I do live forex analysis every now and then during the day. I do that. I did one on the British pound US dollar yesterday, and I did one on the Euro GBP on Thursday or Wednesday. Thursday or Wednesday, I can't remember exactly when. And though I mean the forex trade on the Euro GBP hit the target, so we're out of it. In fact, on Monday we're looking to go back in on the Euro GBP, taking another shot there because it looks like we have surpassed some serious resistance that I thought we had there. So maybe we can go in and take another shot for a leg lower on GBP. We're going to put a line here. There's another line that we're going to put here, right here at the bottom. And we are supposed to be putting another line here, but I mean, it's getting too much. We have too many lines now. Okay, for this turning point, we're going to put a line here. There's another, we had another turning point here, but I mean, I'm going to leave these because I mean, we had this overhead resistance here. So going back, we have some turning point here also, this one. Okay, here we have another one, here we have another one. This one we're going to leave. This one in the middle we're going to leave. We're just going to mark these two. This one here and here at the bottom. And currently, we have this turning point here. This is the current one that we are looking at on EOH. We are looking at this one, and we have this one here at the bottom. Okay, and another one here lower down. You see this one here? This is a turning point. So 50 is very important on EOH. Any close below, any daily close below 50 could see this price. Could see the price of EOH coming down to 39.40 or 39. We're looking at this area here. This area 50 is very important. Where I have my cursor, it's very important. If we get a close below 50, one of these days, there's a good chance that we're coming down to 39 on EOH. I'm not making a call here. I'm just looking at what these horizontal lines that I have on my screen are showing me. So you must keep you must keep an eye on this one. Currently, we are trading between 60. Well, I mean, you can call it 64 and 50. We are between 64 and 50. Around this area, I think it's a sell zone because I mean we are below our moving average here. So if we get any aggressive sellers stepping in and pushing the price lower, we expect the price to come lower down to 40 bucks or 39 rands. That's where I expect the price of EOH to end up eventually. I'm not saying that it's going to turn around when it gets to 40, but I expect another leg down going to 40 bucks. I don't know how long that will take, but if things turn sour, the mood in the market turns sour, there's a good chance that we can get there very quickly. So you can mark those levels. The levels I'm looking at, if I were to go in and take this trade, I would look at maybe putting my stop stop loss above 65.50. Have my stop above 65.50, and maybe just below maybe 50. Looking for 40. Obviously, you need to use your risk reward calculator. You need to make sure that your risk reward is 1:2. You're losing one to gain two, something like that. If you're an aggressive guy, you may choose not to do that, but it's very important. So I expect the price of EOH to move lower to 39 or 40 bucks going forward before we may get a reasonable bounce of 40 bucks. Yes, it doesn't allow short positions. Yes, I know, because I think maybe the guys know that they will lose money if the share goes lower. Yeah, they know they will lose money. So yeah, but I mean, just keep an eye on it. Check it out. See what happens. Okay, you got Frank is saying they got it when on the 8th. Oh, on the 8th. Adri, I'm sorry, man. I don't want to avoid this one, but to be quite honest, I think the team saw the price trading above this line, 72 or 71.98. But I mean, the problem with that was we had our overhead resistance around 78. So that was very close. That was very close. And the next day, what happened is that the price just broke down. I don't know if this was fundamentally driven. This could have been fundamentally driven. At the time, technically, it looked like the price was still going to go higher, maybe towards 78. But when the news broke out, either about the tender or some results, the price broke down like that. So some of it was. But I mean, if you look at the monthly chart, okay, let's just go back to the monthly chart. Let's go back to the monthly chart. You remember what we said? We said if the monthly chart says sell and the daily says buy, you do not buy. You wait for the daily to say sell as well before you act or before you do anything. So you weren't really supposed to take a long based on the signal that you have on the monthly chart. Do I make myself clear there, Adri? Like Arun is saying here, that it's not been a good share since early last year. Let's check. The first time that we broke below this moving average was in January last year. January 2017, we closed below our moving average, and since then it's been falling. So that is what I'm saying. You must always make sure that your trade agrees with your bigger time frame, which is your monthly. If it is a buy and the monthly is saying buy, the daily is saying buy, go in, take the trade. It's a good trade. It's going to make you money. If the monthly is saying sell and the trade idea is a sell and the daily is allowing you or saying sell, go in and sell the trade. You will make money. We did not cover enough when it comes to support and resistance levels. I understand, but I mean, when it comes to deciding whether to buy or sell the market, the moving average is king for me currently. I think it does all the work. Arun is saying that I think fundamental news of a company and anything in the market happen very important with technical analysis. Yes, it's very important. If you get poor results and you get the company maybe on a monthly basis closing below its moving average on a monthly closing basis, then you should know that things are starting to slide or the market is starting to sag there. You must understand that part. Okay, guys, thank you very much for being so interactive during the session. Thank you very much, guys. I like that. This is where we're going to end it today. And if you guys have any questions, you're welcome to send me an email. My email is sihle@quicktrade.co.za. If there's anything that you do not understand, maybe on a trade idea, you can send it to me. We'll have a look at it together, and I will tell you what I think of it. Do I think it's a buy, or it's a sell, or it's a hold? Okay, that's my email address there. sihle@quicktrade.co.za. Thank you so much, guys. Thanks, Nicolene. Thanks, Andres. Thanks, Frank. Feng Gert, Rhino, Feng. All of these you can get them on YouTube. If you go to YouTube, maybe after an hour or so, you should be able to get this. And the previous ones that I've done, if you want to do some comparisons, we have some interesting stocks that we looked at. One of those stocks was Exaro, and a couple of other stocks. We predicted Exaro was going to move lower, and it has actually done that. And when it got to those support levels that we looked at, it bounced off and it looks okay. So guys, thank you very much for attending the webinar. Please do go on to YouTube. Yes, yeah, YouTube or Facebook. Yes, go on to YouTube and type Quick Trade Technical Analysis. You should find some of these presentations. Thank you so much, guys. Well, I mean, Andres, the presentations or the webinars that we do aren't really specific to any instruments or commodities or anything like that. The principle that we use here applies across the board. You can apply this principle on equities. You can apply this principle on forex. You can apply it on commodities. You can apply it almost anywhere, and it works. Okay, guys, you're welcome. You're welcome.